Good afternoon, everybody. Welcome to Trader Merlin Show for your June 17th edition. I hope the markets treated you well today. The first half was just kind of boring and honestly didn't do what I expected it to do. I know I'm not good at posting in the Discord group, and a lot of you are starting to pick up the action there. So thanks everyone who's taking part in that and posting ideas, and hopefully you guys amongst yourselves can create some community aspects for you and maybe further discussions that happen on the show. The link is down in the description to the show from now on, so I'll keep it there for those of you who are not in that group and want to participate. Great. Again, read the rules. I'm going to be pretty strict on any sort of politics or name calling or any profanity, things like that. But anyway, let me talk about the post I made, not just on, Lifrim says, checked out Max Sabbath. If you saw the videos from Max Sabbath, nothing can prepare you for what the actual show is like. So fun, so engaging, great crowd. There's even a mosh pit broke out that was just wild. Anyway, I posted this on the TikTok update that we do early in the mornings before market opens, and I also posted it last night in the Discord group, which was this chart here. And this was as this candle was forming, so it was just opening up last night on the rollover. And the chart looked like this. I didn't really bring it up on this show, unfortunately, because I had too many thoughts going on in my head. But you have that NASDAQ rallying into very close to all-time highs. Now, granted, I know where you see that top yellow line there is not the all-time high. It actually goes back another week or so, or a couple of weeks, almost a month actually, to December 17th is the all-time high for the NASDAQ 100. But as we know, those Magnificent Seven dragging this market higher and higher. So as I saw this, I'm like, you know what, it feels like we're headed right into overhead supply. I would expect it to be a sell-off. And I was sitting there waiting this morning. I got up early. I was just kind of waiting for a sell-off and had my finger on the trigger. But look what happened. This is just the nature of trading, guys. You can get all ready for something and be all prepped for it. And you can see the white part here is where the market's opened up, and it actually just kind of kept drifting higher and higher, and I was waiting for the shorting opportunities. And we'll talk about why I kind of set up my preferences or my bias that day to the short side. Obviously, the first piece being there were an overhead supply. The second component was, President Trump making comments like he did, basically saying, look, if you're in Tehran, flee the city immediately. Now, anytime a sitting president, regardless of how brash, cocky, calm, or conservative that president may be, when a president says evacuate a city immediately, it kind of sends panic and shockwaves through the markets. Now, I was surprised that we didn't see a more dramatic impact, and of course didn't see any real follow through on why that should be. Certainly it speaks to a big escalation going on in that conflict, and I wanted to bring this part up here. Orit sent this one in last night as well. Says, I think you're very wrong with Iran. It's going to get much worse. And look, Orit, I'm trying not to be political. I'm trying not to take sides in any of this. All I'm saying is I was hoping that it would have calmed down. Now, what Trump is insinuating here is a deeper escalation, and that may be. I hope not, but if we do see the escalation and more attacks on Tehran and other cities in Iran or in Israel, you're going to see oil prices start to spike up even higher and higher and higher. So I was anticipating the equity markets having a pretty good sell-off today, and literally was just finger on the trigger for the first couple hours, and then had other obligations to get to. And of course, as the markets do, all of a sudden, after I walk away, that's when things started to sell off and drifted lower and lower and lower and lower. So on the day, it wasn't atrocious. It was down 1.01%, and I'll be honest, I thought we would be down much more than 1%. I was literally looking for maybe a 2% down day just because of Trump's comments. And again, you don't hear a president say something that dramatic very often. And, when you saw or heard that comment last night, in my mind, I'm immediately thinking, Trump must know that there is not just a regular attack, but like a huge attack happening on Tehran, which did not come to fruition, goodness. And also calling for the immediate surrender of Iran. And again, I don't know. I don't personally think that the U.S. should be the police force for the entire world. I think we should kind of stay out of this mess and not pick sides. But it is what it is, and it's going to impact our ability to trade these markets. So that's why I kind of chose today's topic, which was these markets on edge, and really having. I loved how AI put this picture here. I just show markets on edge and just kind of uncertainty around the world. And it really shows the world kind of like coming apart, particularly over in that Europe, Middle East, Asia area. U.S. doesn't look as affected, but let's be honest, it is going to be affected. And I feel like globally we have this sort of fragmentation going on right now. So I actually really like that graphic. But as far as how I'm handling it, that was a question from yesterday. I'm trying to stay in those markets that aren't going to be as impacted. And lo and behold, it does look nuclear big. Let's hope I did not imply anything by that. No one wants nuclear action here. That would be the absolute worst. For me, even though I'm trying to stay out of that volatile stuff, you look at the markets I was in today, Bitcoin could not have been in a nicer downtrend today. I mean, really starting late last night, it just kept sliding and sliding and sliding, which to me kind of is an about face to what I expected it to do. And, that's normal. Things don't have to follow exactly what I think is going to happen. But we had a really ugly down day for Bitcoin. Is down over 4% on the day. And, of course, that hurt my trades. I've got a while to go before I worry about that. But we came back down to that yellow box again. We hit it. We're now bouncing up off of it. So, again, that becomes very important on that futures market between 101,800 and 103, call it 104 for Bitcoin. As far as MicroStrategy goes, you were down 1.8%. It's also down another 0.79 in the after-hour session. So closed at 375, currently at 372. I have the 375 strikes and the 400 strikes expiring this Friday. So we shall see how that all pans out by the end of the week. Still got some time to go. Circle, I'll bring that one up here just because it was down a little bit today, down 1.24%. At a low point today, Circle actually got down to 143 before bouncing up. It's now up in the after-hour session, but I have the 140 puts and the 110s. The 110s will probably expire worthless, but I think I'll make up for all those losses on the 140s, but time will tell on that one. And what else? Oh, UNH. Just running through some of the positions I have on here. And I have UNH as well, which was up just slightly, although it's erased those gains. And again, I have the 305. I have the 300 mark on that screen. I'm pretty sure I'm in the 305s. Let me just make sure. I like having the current numbers on here just so you guys can see exactly what positions I'm in without fabricating numbers as some not so popular instructors or traders in my life do. Let's go and show you. I'm bringing up the account here so I can get that to you. Okay, so the UNH, I had the 305s. I thought that's right, because this was the previous number. I had the 300s, so we'll put in 305s here just so you guys know where I'm at. Again, those are weekly. Those will expire this Friday. I think I'll be okay there, and even so, I'm fine long-term on United Health. I think we've probably reached bottom here, especially for a company that has that much profits and revenue looking pretty darn good. All right, let's see what Steven said. For me, I do the opposite of what I think is going to happen, and that works better in these markets like George Costanza. Great episode, by the way. Certainly is one of my favorite episodes ever. And, there might be some merit to trading contrarian to what you think. I make the argument in my teachings and just my practice that I believe the media and the news is trying to paint a narrative influencing market behavior, and that may certainly be the case. But, I came in armed with that short perspective, and I wouldn't have been wrong today, right? It was just timing. Timing was what it boiled down to today, because I was correct in expecting there to be a sell-off. It just didn't really happen until after I stopped watching that market. So I like to continue going with my plan, and it would have been like this. Pick that opening, 15-minute low. There you go. 22,000 would have been the short point. We dropped a couple hundred points from there. So. Yeah, exactly, Big Ed. The news manipulate? No, never. Absolutely not. No, it's all straightforward, honest, pure news. Yes, the manipulation is insane. Let's see. So, Orit, I wanted to just spread. There was actually some much more negative comments that were made here, Orit, which I understand is probably emotionally driven. As trading goes, I think it's best to put your emotions behind it, whether you are supporting one side or the other and have really strong, passionate feelings about it, just like you could argue with the protesters. Whichever side you decide to hang your hat on, if you're choosing sides, you got to be careful there, because an emotional trade is usually a very dangerous trade. An emotional trade is usually a trade that will cause you to lose money. So when you're making trades off this info, try not to have your emotion in it, too much bias. Trade just to earn the money on it. Obviously, we can do other things with our actions to help support a cause if you want to or not. What else do I have on here? Okay, I'm going to run through the top 8, and then I'll go through some listener questions here just so we can, and there are some good ones. Les and Mario, you both sent in some pretty good questions that related to DeFi. Right now, as we go, there's a vote currently underway for the Genius Act. And I'll give you the update on that in just a moment. There's an unofficial tally so far, but I want to make sure I get to the top 8 here before I... Oops. Let me mute this one since it's currently going as we speak. All right, let's go look at our top 8, and then I'll go to the crypto questions. Working our way up from the bottom. Obviously, Bitcoin was your biggest loser on the day. Down 3.68% now, so a little bit of a bounce. But again, nothing really to worry here. Oops. Nothing really to worry about here. Trying to get that out before you guys see it. Other than that yellow box. So until we close below that thing, I'm not worried. I think we'll be fine in the long run. Just expect more and more volatility. So today obviously was not great because we gave back a bunch of what we earned yesterday. But it's all paper profits now. I'll get to that. Big Eb says, would the Genius Act push Circle up? I'll get to that in just a sec. All right, so your 10-year yield. 10-year yield dropped 1.42%. Currently now that 10-year is sitting at 4.387. And this is so tricky as a trader from a perspective of trends, right? You guys know that one of my favorite things is trends. We could argue that the longer-term trend is up, although it's been slowing down, right? That's the long-term trend from 2020. We could argue that the intermediate trend is up since April, higher lows. Great. However, if you look what's happened starting in May 21st, it looks like it's making lower highs and slightly lower lows. So you could argue that this might be the beginning of a bigger downtrend. I for one, do think that this is going to turn around and go higher, but for right now, that trend is to the south side, which means we could be pushing to 4.32% here in just the next couple of days. But again, any political decision, we have an FOMC statement tomorrow, which of course is monstrous and going to move this market. So nothing too big here. My guess is calm before the storm. NASDAQ, we already looked at this one. I did expect there to be a sell-off on this one. It did happen just after I got called away to do other work, unfortunately. Sometimes the perils, it's a double-edged sword. I think many of you would agree with this. I know some of you are full-time traders and that's all you do. Others of you work full-time and you trade when you can, and maybe there's some hybrid in between there. For me, when I was exclusively trading and not doing any other work, I found it actually rather difficult because I had so much more dependence on the trading results and it put extra pressure on me that I had to make money. Whereas now, and this is what I prefer having a salary or earning income elsewhere, having a check that comes in, knowing that all those bases are covered and mortgage and rent and whatever it is I'm paying, that's all covered through employment. And then that takes all the pressure off of my trading, and I find my trading is actually doing much better. Now, unfortunately, like today, had my finger on the trigger and I was ready for that short opportunity. It just, it happened right after I got called away to go to the office and take care of some stuff over there. So unfortunately, we missed these things, but I don't let it get to me. It is what it is. There'll be another trade tomorrow. It's just, I know I would have pulled a good 20, 30 points out of an index here and had a nice day, but oh well. Sava's working full-time and trading when I can. Yeah, and if you are a longer-term perspective guy, you can certainly set up bracket orders, OCOs. I did not have one set. Generally, when I trade futures, I like to be there watching it. With the option thing, fine, I can let those run. But with futures, I like to watch it like a hawk, and I stay on top of my trade. So I usually don't use bracket orders there. Margaret says, I learned to walk away from computer allows me to get the bigger gains and be unemotional about it, right? I'm sure, Margaret, you've had trades and all of a sudden you find yourself up $500. You're like, oh yeah, I'm going to take that profit. Whereas if you just left and came back and didn't look at it, you're like, oh wow, I'm up 2,000 today. Great. Awesome. Yeah. I think as long as you have stop losses in place, walking away is good. And you could use stop losses, whether that's automated through trailing stops or using mechanical stops, but you should always make sure you have a stop loss in place, obviously. It goes without saying, Margaret. Margaret knows that. Mamon says, retired, trade the open, and screw off after 10 o'clock Pacific time, right? Yeah, Mamon has been active in the futures Discord, so if you guys are looking for someone to hang out with, Mamon is in there every morning in that futures Discord group. Let's see. Steven says, I'm a retired full-time trader, but don't really need to make money on a daily or weekly basis. Lots of days, nothing to trade. Didn't do one thing today. Love it. And one thing, Steven, I would add to that. Again, I don't know everything that you trade. That's why it's nice to trade different markets. For example, you could trade equity index futures, which is the Nasdaq, S&P, Russell, Dow. That's all going to go the same direction. So if nothing happens there, you're not going to get any moves. But then if you're trading futures, you sprinkle in something like crude oil, natural gas, maybe go to commodities like corn or wheat or soybeans, and then you have markets that aren't so dependent on a broad quote-unquote market, right? They may be moved by some crops report or commitment of traders or just some macro environmental news could impact those. So it's nice to have different markets to look at. And we talked about Jerry Baldwin's kind of strategy where he had like 6 things he looks at and that is it. And diversify a little bit here. So if you don't see anything on the equity indexes, maybe go to commodities, maybe go to some other market there. So I'm about to fully commit to only trading S&P products. All right, they get plenty of liquidity there. Steve said I trade everything, futures, options, etc. Great, awesome. Margaret, is there such a thing as, Margaret says, markets are too rangy lately. Is there such a thing, right? When you say things are too rangy, that means you didn't find opportunities. However, Margaret, options. If something's range bound, that's even better, right? If it's range bound, I love range bound markets because you can get paid when the thing does nothing. It just sits there and peters out. Those to me are my favorite. Less stress. All right, I'm almost working my way up that list. Steven says, I prefer not to trade equities. The only issue there is equities typically are a larger capital outlay. Obviously, you have free commissions, but yeah, you generally have to pay more. I think that the market has done a good job of creating instruments that give you high rates of speed, meaning these triple leverage ETFs, if you're trading, right? If you're trading. If you're not, then, buying a share of Microsoft is a little harder to make a great rate of return on a regular basis. However, if you're doing options, remember, it's based off those underliers, so understanding that price action is even better. So a lot of options, guys, in your iron condors, you got call spreads. Oh, yeah, iron condors and range-bound markets, absolutely. But you never know when or when they're going to break. Yep, that's true, Tofi. You never know when or where they're going to break, which is why you look at things historically. There was a period of time a while back where we had the Russell was for month after month after month stuck in a range. It was perfect. But it doesn't always work like that, right? We looked at what was going on with United Health, UNH. Now, I don't know if that's necessarily channeling. It actually feels like it's starting to trend up. But this is a market where because of the fear in UNH, the premium is pretty decent, right? It's not like MicroStrategy or SMCI or anything, but it certainly is a higher premium than a normal stock. And its volatility has been relatively mute for the past month. So, this might be one where also using a spread strategy could do very well. Vertical spreads and long credit calls puts are core strategies. Yep. Are most crypto traders very young? Are your students very young? No, actually, no. I think this is going to be very condescending, so I'll offend some people. I think that most of the traders you see on social media are very young, uneducated. They don't know anything about trading, and they're just degenerate gamblers, and they're very young. Most of my students, because it's through Trading Academy, most are coming through Trading Academy, and typically there's an older clientele there. So I would argue that most of the people that take my program are older. And understand the risk with it, understand that there's opportunity, but also that they have to protect themselves. So I think we have a very different group, at least for Trading Academy, than a normal crypto group. I think generally you're going to have a younger crowd, but no, not with my class. I think most are your standard demographic, which is going to be slightly older. So I'd say most are under 35, Margaret. Well, I don't know, man. Certainly the younger generation is going to be much more open to digital assets, right, and cryptocurrencies. Convincing someone who's older, like even my dad, who trusts me implicitly, he still is on the fence about it. He's like, I don't know, this Bitcoin thing doesn't make sense. I'm like, just trust me, Pops, go with it. And unfortunately, he had some of his money over at BlockFi, and he lost it. So trust me, Pops, I'm right. It's just we were dealing with a crooked firm that I didn't know. Louis says, I feel like that's changing. Most classes in Scottsdale are younger. Yeah, I think more people are are understanding that trading as I'm going to use quotes here for the podcasters, trading as a profession, I just hate using the word profession, but requires education. It requires practice and practice and practice and having a plan. And I think that the smart younger ones are looking at education as a way to help them achieve those financial goals, whether it's futures, forex, options, crypto, whatever. You guys might appreciate this, and I feel really bad, but my neighbor across the street, sent me a text message last week, and he said, and I think I might have mentioned this to you guys. He said, "Can you teach my son how to day trade?" And I was like, whoa, hold on a sec, bro. Wait. I mean, how would you respond to that, guys? If your neighbor across the street, he's a very nice guy, his family's awesome, I love him to death, but saying, "Could you teach my son day trading?" How would you respond to that? Because all of you understand how difficult it is. It's not like, oh, I can teach you a 1 hour thing and it's done, go for it, right? It is hard. And I messaged him back, I said, me teaching your son day trading is like me teaching your son how to be an engineer. And I'm already busy teaching for 2 different educational firms. I run my own free show every single day that your son is more than welcome to. And he may actually be in here right now. Steve says it only takes 5+ years to learn. Mamon says, pay me. Yeah, it's one thing if it was like I could literally give you a couple lessons and you'd understand it, right? But it's like, teach me how to fly an airplane. I can't do that. Difficult. Very, very difficult. Send your neighborhood trading academy. Noam, I'll send him your way. Noam. You can teach this young guy. And I think he's like 15 or something. So, I mean, I really respect the fact that they would ask me for that. But, boy, that's a tall ask, I would say. And I politely declined. I just don't have the time. I don't have the time. Plus, some of you have very consistent times that you trade. I'm actually rather inconsistent because of just all the other obligations that I have. So sometimes, like today, morning was great. I had plenty of time this morning. Nothing showed up, right? So what am I going to do? Bring him over here and just show him how to twiddle his thumbs and not trade, which is a great lesson by itself. Sure, for attorney rates and banker hours, yeah. Flying is easy, now land. I think even flying is hard, but yeah, it was one that kind of caught me off guard. I felt really like I felt bad saying no because you want to be neighborly, right? And they're really good people, and I would love to, but I mean, this is what I do for a profession. Pay me. Teaching them young, I feel like emotions are easier to manage since young kids won't have any bills to pay, and they don't get that emotional about money, right? I think when you're young, if you lose $1,000, I don't think you really understand how important it is because you don't realize how much time and effort it takes to make that $1,000. Get a value of money. Okay, sorry, I went off on that tangent there. Let's go to Andres. I'd feel guilty charging them, and $500 an hour. No, I mean, I wouldn't do it. I'd send them to a class. So I was asking a cook to make you dinner, but I would argue that's easier, Mamon. Right? Cooking can be pretty easy. Just follow a recipe, right? You can give me any recipe, I can follow it and make a pretty good replica of that dinner. I could take anybody and teach them a specific set of rules to trade with and show them everything, and they still won't make that trade the right way because your emotions get involved. It just makes it different. All right, what do we have? We had gold down 0.3%. Could this be another little bull trap where it broke out to an all-time closing high yesterday or on Friday? We gapped up this on Monday, sold off, and now we kind of hesitated, but slightly down, not that big of a deal. Your Russell was a little bit. I haven't talked to him, Margaret. I feel bad. Chris, no way. The only person I would send to him would be regulators, law enforcement officers. Yeah, that guy needs to get his clock cleaned by a law enforcement officer. Podium time. We're there. Podium time. Russell 2000. I already got on the screen here. I was really confident that this level would hold. It didn't. We actually closed down below that zone that you see on my screen there, so that's not a good thing. But rallied back up above it, and now it's just indecision moment. So I'm going to take this yellow box off because I don't feel like it has any significance. We've knifed through it repeatedly. Picture-wise, still great for the Russell. Series of higher highs, higher lows, uptrend, all looks good. The Dixie. Dollar bouncing off of the lowest possible part of that demand zone yesterday with a hammer formation. Now that nice little follow through for the Dixie. If anybody's trading the dollar futures, great. It was a nice day for you. You got a 0.69% gain. 98.82. Now the question is, where's it going to go? If this trend is in fact intact, then you'll probably see this rally up towards that 99 mark, maybe 99.20, but I don't see it going that much higher there. If it does, that could be bad news for the U.S. equity markets. And finally, of course, because of President Trump's wonderful tweet last night and just the uncertainty, that escalation there, that market on edge, if you will, we had a 2.09% increase in crude oil today, 73.27. Okay, questions that came in. Obviously, I had the one for Ori, who is definitely, I can tell which side of you're on. If you go to Les G, who's here today. Great questions. And I do love the fact you guys sent in some very, very inquisitive questions regarding digital assets and crypto. You guys all know my thought. We're migrating our systems. Current platforms will update and become digital. And so I like this one. Les, here's your question. And you were right. His first part of the question says, I thought this question might get to you quicker on email. And lo and behold, Les, it did. He says, when I use my Discover card, I get cash back and don't have to have the money in my checking account until the end of the month, which I always do. If I use stablecoins to purchase something, can I wait until the end of the month, or do I need the money already there like a debit card? So right now, it's going to be like a debit card with USDC or stablecoins. What may happen in the future is we will probably get credit card systems that utilize USDC or a stablecoin, and then it's up to the credit card issuer, right? So right now, Visa is using the dollar system. And how does that happen? Visa connects to different banks. Actually, almost every bank now will accept it. And they negotiate terms and conditions, and they get a cut of the action. I could see there being, whether it's Visa or a competing Visa, my guess is Visa will do it. So you'll be able to choose different currencies on Visa. Like if I'm the CEO of Visa right now, my plan would be, we're already using the US dollar all around the world. Let's connect Visa's infrastructure to multiple stablecoins around the world. So I could have a Russian stablecoin connected to Visa. I could have a US stablecoin or a European one and connect those so I now have all of that connected under the Visa umbrella and I keep my infrastructure in place. That to me would be where they're headed. Now, who allows you to hold that money for 30 days? So when you use Discover, which Discover does have their own bank, Discover is the one that's on the hook for that for 30 days, right? If you default and decide not to pay, Discover is the one that's going to lose out there. So Discover is taking the risk on the opposite side of that trade because they know mathematically the vast majority of Americans are financially irresponsible and are going to carry a balance, right? Not Wes, not me, not most of you guys, because you understand how important it is, paid off in full every month. We're the people that these card companies hate. However, they make up so much on the interest that they charge that the majority of population is carrying balances. It offsets people like us, right? We get borrowed money for free for 30 days, essentially. And that's why they charge a fee. It's supposed to eat away at some of that cost. With stablecoins, that infrastructure is not set up yet. But it could get to the point that JP Morgan, let's say Wells Fargo, actually Bank of America. Bank of America's already said they're going to do it. Bank of America will issue a stable coin. And that stable coin may be treated exactly like cash. So maybe there's a card where I can pay with USDC and let it ride for 30 days and ultimately have to pay it at the end of the month. But for now, it's going to be as a debit card. Down the road, when you look at what the future holds, right, that's very difficult to forecast, but I do see it running parallel with the traditional dollar system until the U.S. government says we're going to create a United States central bank digital currency. And that will be the government's digital coin. And then that will be the most predominant one used. They will probably, when that gets there, I can see them slowly trying to phase out stable coins, because why would you need a stable coin when you can just use the Federal Reserve coin or CBDC? Is there a thing as the best stablecoin? Right now, there is not a thing as the best stablecoin market because, again, there is no standardized rules. It'd be like me saying, what's the best football team? But there literally is no rule book on the field. There's no rules on hitting. There's no rules on plays. There's no rules on anything. It's like, well, how can you ever say this is the best team, right? So once you start to wrap rules around, which the Genius Act, by the way, let's go look at the live vote. Ready? Drum roll, please. This is the live vote. It says it's unofficial. Survey says, oh, look at that. The Genius Bill has been amended. We had 55 yays and 25 nays. Not done yet. Not done yet. But that's a great sign that this Genius Act could pass. What does that mean? That means that we will now have very specific rules on stablecoins. So then, Margaret, after this passes, and there will become a time where every stablecoin in America will have to follow these rules. When that happens, I will literally create a list for you and say, this is the best stablecoin to use. And it's going to be a combination of things, right? First off, these stablecoins will all have to follow a very specific allocation assignment, meaning every dollar that comes in, I'm making the numbers up, but every dollar that comes in, 25% in cash, 35% in treasuries, and then maybe you can have 40% in the repo market, right? That's it. Yes, that's live voting, Lisa. It's live voting. Still going on live right now, and I'll keep it up here till the end of the show and see where it's at by the time we finish. So once we know that those allocations are the same for every stablecoin, then on paper they're all the same, right? On paper, they're all going to be the same. If they all have a specific allocation per dollar that comes in, then they're all the same. So then the second criteria is going to be who's backing it. Because whoever backs it will tell me its odds of success and stability. So the fact that Circle has Goldman Sachs and BlackRock behind it and Coinbase behind it really makes me feel like that's the leading candidate right now to say it's the best. But at some point, we'll have to wait and see what the other competitors are, because Joe says USDC's got my vote. USDC is already there and pushing. However, remember, this Genius Act now allows very specifically for banks to issue stablecoins. So Joe is like me in the sense of we both look at the traditional financial system and we're like, screw you guys. We don't like the traditional financial system. I want to do things on my own. Take the power away from you. So for Joe and I, we'll probably use more USDC, but there's going to be a lot of you that have a bank account. You got your Chase, Wells Fargo, Bank of America, whatever. They're going to have their own stablecoins, and you'll just start using those because of convenience, right? That's where the institutionalized stablecoins, I think, will do really well because they already have all the infrastructure for banking and financial services. They'll just give you the option to use stablecoins. So time will tell, but for now, it does look very favorable. Senator Lummis posted about an hour ago that she says we're 3 minutes away from passing this, and that was when the vote was supposed to start. So this is ongoing right now, unofficial tally, but so far it looks pretty good that this is going to pass here. I don't know what the total number of votes is, but right now it says 57 yay, 26 nay. So good. And Mark says, Bitcoin 250. This is not the piece that's going to just flick a switch and Bitcoin's at 250, right? This opens the doorway to the much more contentious, complicated piece of legislation, which is called the Clarity Act. The Clarity Act is now what's a security, what's not, and that is a much deeper dive. The stablecoin one, honestly, I can't believe it's taken this long. It should not have taken this long. It's a no-brainer, super easy. This Clarity Act will spell out a lot of different channels in crypto, whether that's DeFi, whether that's privacy coins, whether it's securities, whether it's commodities, and what they can and cannot do. That's going to take a lot longer. Now, my big concern for all of us is if this Genius Bill passes, what's in it, right? In my mind, it should be very simple. Here's the rules for a stablecoin. This is what a stablecoin can do. Here's how it's issued. Here's how you get your permits. And it only deals with stablecoin. I'm hearing that there's some really crazy other garbage put into this Genius Bill. Like, does nothing to do with crypto that politicians slide in, which really is embarrassing, but unfortunately we won't get to see it until this is already voted on and done. So this is a two-pipe process. Yeah, I would say this is step one of the big shift. And to me, what today's vote does is it says, okay, digital assets are here, and we're okay with that. That really was what stablecoins represent to me, because it's saying create a digital dollar, create digital currency. So don't think cryptocurrency. It's so pigeonhole, siloing you into this belief. this is digital assets. And if you can now have a digital dollar representative, that opens up the doorway to every business in the world accepting digital payments. And now that opens up to the next big step, which is the companies themselves becoming digital. So yes, I do think that this is the first part of it. The second one will probably take a lot longer because of its complexity, but it's a really good thing. All of us here who are crypto enthusiasts understand the need for patience with this one. This isn't like you hit a switch and all of a sudden, we're soaring to the moon. This is historic in the sense of we are changing the entire financial system. All of it. From credit cards to lending protocols to investing site, all of that is changing, and it's all built off of digital assets. So this is great. I'm pretty darn excited. And no fees with the digital dollar. Depends where you use them, right? Depending which blockchain it is. Like if you do transactions on Coinbase, they don't charge you a fee because I think Coinbase is going to eat those fees because they're really small. But remember, a stablecoin transacts on a blockchain. So if it transacts on Ethereum, you need to pay transaction costs. That's why a lot of people like Solana, because Solana's transaction costs are very little compared to Ethereum, which is much higher. So anyway, there you go. So Les, I hope I answered your question there. In the future, I think you will have credit once they issue cards where they can now charge interest on it. Coinbase, by the way, just issued I think it's a Visa card that you get 4% cash back on every purchase, and they pay you in Bitcoin. I'm on it. I used to have one. I had the BlockFi card. The BlockFi card did the same thing. I was 3% cash back on everything, and they pay you in Bitcoin. And of course, BlockFi went under, so I never got any of it. Isn't that nice? But I will probably apply for the Coinbase Visa card and use that for everything that I can, just to get more and more Bitcoin. No annual fee either. Let's see. Okay, Mario. Mario asked a good question. And there's a lot to this one. I'll let you guys know. It's a really cool looking card as well. Let me see if I can show it to you. Just turn the volume off. Yeah, this vote's been going on for an hour. It's now 64 to 28. It's going. It's looking good, folks. Let's go Coinbase credit card. It's got a really, really cool look to it. Let me see. Credit card is exclusively available to one members. That's nice. I'm not a one member. I don't want to pay that kind of money. There you go. Oh, up to 4% cash back. Look at the card. It's all just code. And I'm sure that this says something. This is SHA-256. I'm sure some kind of encryption. I believe that this is the Genesis block to Bitcoin. For those of you who don't know what a Genesis block is, a Genesis block is like the first block in a blockchain. And I believe, because it says right here on the right-hand side, I know it's hard to read. Let me bump this up a little bit. You can see here it says, the times, 03/Jan/2009, Chancellor on the brink of the second bailout of banks. This was written in the original Genesis block for Bitcoin. So this is probably just the code of the original Bitcoin block that happened. This is the code that represents that block. And this is called an inscription. So you can actually write things on a block. And in this one, they wrote, because it was the Genesis block, kind of interesting. It says, the Chancellor on the brink of the second bailout of banks. And that's really, again, why Bitcoin was created. Because banks are irresponsible with money. They were censoring transactions. They were freezing accounts. Pretty cool. It says coming fall of 2025. So I will probably apply for early access here. But I think I saw it said it's only for Coinbase One members first. But whatever. Yeah, there you go. Credit card is exclusively available to Coinbase One members. Annual membership starts at $49.99. Will be available to all customers soon. So, no. You got me an annual fee, and I have to be a Coinbase One member? Forget it. I probably won't get it. But good luck to all of you that do. All right. Enough. Let me move on from that. So let's go to Mario's question here. How much time do I got? Perfect. Got 20 minutes. This is a good one. And again, this is on digital assets as well. Mario says, question for the show, which I watch every day, not live, as I reside in a different time zone. So, benvenuti, Mario. What time zone are you in? He says, what's the best method to earn yield on USDC? Remember, that's the stablecoin for US dollar. I'm leaning towards doing it through my Nano Ledger, depositing it onto lending protocols on DeFi like Aave or Compound. Doing it through an exchange seems the easier way, but I've lost a lot on exchanges going down, hence why I prefer having access to my private keys. So, great question there, Mario. And you're right. Let me see if I can bring up on like Aave. I don't have my ledger connected, and on this, because this is so public facing, I don't show my ledger accounts or balances or anything like that, or my trading accounts. I just don't trust. In this day and age, people will hold you for ransom, and it's just kind of crazy stuff. So anyway, you mentioned using an Aave. So for those of you who don't know, a ledger is a device that looks like this. So it's just a little electronic device, looks like a USB drive, and this stores your public keys and private keys. So you can go to this DeFi marketplace, which is not controlled by any one entity, and you can go out here and you can lend out your Ethereum, and you can see you said USDC. So right here, you can lend out your USDC, and you can earn 3.33%. Now, what's great about this is you are in control of your private keys. You actually own it still. You're just lending it out. So you control it still. But that's 3.3%. If you look at what Coinbase is going to give you, you get more than that. So let's go. And now they're telling about the security incident. That's great because they got hacked again. Here is the USDC. I'm earning 4.1%. And this is just a tough call you're going to make. Typically, you'll make more money on a centralized exchange because they want you to keep it there. It's assets, AUM, assets under management. So that's what they want you to do, is keep more money there. And you look at this, it's actually kind of interesting. I think I showed this to you before. You can see right here, I've only got like $334 actual dollars sitting there, and I don't earn any interest, zero. But if I keep my USDC, I earn 4.1%. So I'm keeping my dollars there, and I'm gonna probably move more over. And Mario's fears are justified. Do we trust these exchanges? Do I trust Coinbase? Not really. One thing I do appreciate about Coinbase is it's in the US, number one. It's publicly traded, which means it's under a lot more scrutiny from regulators. There's reports they have to file. There's audits that they have to do. So I do believe it's safe from that respect. And also they're holding a lot of cryptocurrency for major corporations and things. So there is a little bit of extra incentive for them to keep above books. They make plenty of money. So I'm not that worried about it. Would I put my life savings on this one and let it all just sit here and earn 4.1%? Probably not. But 20, 30, 40 grand, I wouldn't have. Instead of keeping my emergency reserves at Chase, should I keep it here? And as Joe says right there, Coinbase is nice, but they can shut you down and freeze your account at any moment in time for anything. And not only that, they can limit your transactions, which is just like having a normal bank, right? So, which is why, Joe, I was saying a little bit. I would keep some of it there just for ease of use and accessibility. Remember, if you keep your USDC at Coinbase, I can click a button and within 5 seconds have all of this stablecoin put back into dollars and put back into my checking account in 5 seconds. If you do it through Aave, which is a DeFi marketplace, I have to take a lot longer. It's a much more complicated process. I have to call back the loan. I have to now convert it I have to send it from Aave. It's on my ledger. So now I have to take it from my ledger and get it back to an exchange, which costs me transaction fees. Remember, every time you send USDC to a ledger, it's going to cost you money. There is a transaction cost there. So, part of me does feel okay. As long as it's not everything, I would leave a good portion of it on the exchange, Coinbase, particularly because I'm making 4.1%, and then maybe do some more, a little bit in DeFi. So, Mario, I guess the answer to your question for me is I would split it. And I do feel your pain. I lost a bunch of money on Celsius and Voyager and BlockFi. Let's go to Compound and see what they're paying. But you're typically not going to get higher than 4% by going to, it's Compound.fi. No, not that one. I like that they actually block POUND. I'm going to go Compound, and it should be Compound.finance. That's what it is. Okay, here we go. Okay. Yep, so your 4-week T-bill gets you 4.1%, which is, and the challenge there, Big Eb, is if you're doing the 4-week T-bills, you have to go in there and you have to rotate and automatically buy those things, right? And you have to do manual, whereas I can just buy USDC and sit on it and get 4.1%. There's a trade-off there. Your money's safer. I mean, if we have this bell curve, Big Ab, if you have a bell curve of risk, T-bills are on that risk-free side, right? Glued to the edge. This risk-free money is what they'll call those T-bills. Certainly, the USDC stablecoin on Coinbase would not be risk-free. Now, it's much lower risk than holding crypto because it is backed by dollars, bonds, and repo. So you're going to get about 4% on that bad boy. But it is on Coinbase, which makes it risky. So, that's the trade-off. How active do you want to be? Do you want to manage it? If you want to just leave your money in a savings account, then, I hate to say it, but Coinbase is not a bad choice at 4.1%. That's not bad at all. Now, Compound.finance, if we go to the app here, let's just see what we can lend out our USDC and earn. So, let's go. Where's USDC? Oh, it's not going to... I don't have my wallet connected, so it's not going to let me do anything. It looks like USDC, 3.37%. So, not great. Well, I just put it on to re-up 12 times for each one. So, you have it fully automated, Big Ab? Money market accounts these days are paying high rates too, so the risk of stablecoin should pay more. Well, they're technically not much risk, Chad. I mean, really, they're just holding treasuries and T-bills. I mean, in reality, a stablecoin shouldn't have to pay you. It's like saying that the dollar should pay you. No, the institution that holds the money is what pays you, not the dollar itself. I'm a Big Ab. 4-week T-bill is the only way. That's cool. I like that, Big Ab. So you're doing that through Treasury Direct? That's cool. I didn't know they had an auto re-up feature. That makes it much easier. Obviously, you just keep going, keep going. That's fantastic. Really good. Certainly going to beat what you get with your savings accounts. I mean, even if you go to somebody like SoFi or Ally Financial, you're still beating that with T-bonds. So yeah, Treasury Direct. No extra fees added. So that's a great one. So again, Mario, that'll be my 2 cents on it. If you're going to go with the wanting to earn yield on it, I feel okay with Coinbase. I definitely echo the comments that were made in here about they can freeze your account at any moment in time. That's always going to be a risk if you use a centralized exchange. And that goes for Wells Fargo, JP Morgan, Chase. All of them can freeze your accounts at any time. Coinbase is no different. With Aave or Compound, you're using a DeFi marketplace, and there isn't someone who will censor those transactions. This is, to me, a very different type of mentality when you're using these type of lending protocols. But you'll notice there's other stuff in here. So I could lend out my Ethereum and earn 1.93%. I can do Tether making 3.29%. Most of the other crypto doesn't really pay that much. You can see I can lend, I thought I could lend Bitcoin here. No, I can't lend Bitcoin here. Do crypto futures shut down for an hour a day and weekends? Not perpetual futures. But I would imagine, I don't know. I have not traded over the rollover period with Coinbase. We can probably look at it and see. One sec. Let's go to advanced. Quite often you see a little rollover there. Oh, we can trade SOL and XRP futures. I've mentioned this one before, guys. If you are using Coinbase, be extremely careful. They are very illiquid. Like extremely illiquid. There's not a lot of volume going on here. I've got a 5-minute chart of Solana futures right now on the screen. And in the last 5 minutes, this thing has traded 98 contracts. That's not a lot. Very, very light. I mean, you do see a pretty big drop down here. Let me go to Bitcoin, which would be a much more liquid one, and see what we got. I'll have to research that one. It's a great question. I wonder if they do a rollover. I mean, technically, they're going to follow the same rules as the futures market. Perpetual ones, I don't believe do because they just continually go. There's no need to break them. I wonder what Bill would say. About what, Margaret? About the T-bills? He would say awesome. He's all about rolling and doing ladders and barbells and strategies to continue to earn yield. Why not? I think Bill would be all over it. Absolutely. Okay, tomorrow's the big day. Obviously, we've got news happening all the time, but from a forex or from a market perspective, it's all about Wednesday's action. And here is the calendar for mañana. We'll bring up our weekly one here and show you what happens for the 18th. It's all about America. Dun, 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 dun. You notice here, Fed funds, that right now is expected to be 4.5%. No change there. I will bring up the current Fed funds futures. I don't expect any surprises here, although there is an online gambling site, I forget the name of it, that is actually predicting a 70% chance of a rate cut tomorrow. I don't believe so. I don't believe the markets will be caught that off guard, because here's what the betting population is doing. 97% probability we're going to see that rate stay the same tomorrow. So I'm pretty sure this is where we're going to end up tomorrow. So no big surprise there. It's all about that press conference that happens after. As you guys know, that'll happen 30 minutes after they make the announcement. But you also have natural gas storage happen tomorrow. You got TIC long-term purchases and unemployment claims, which is odd. It's usually on a Thursday. So that is your real big stuff for tomorrow. On the earnings side of things, I don't really think that there's anything exciting for earnings. I don't remember there being anything, but let me just look on the list here. I think the big earnings were happening. Well, maybe it is Wednesday, because Thursday market's going to be closed. No, nothing big. You notice here it's pretty much all international companies, so nothing really there. And then Thursday, which we'll talk about on tomorrow's show, yeah, nothing happening there. Friday, we get some earnings on Friday, something fun on Friday. We got a couple weeks till we get to the big stuff, but Accenture and Kroger on Friday, but we'll deal with that when we get there. I think so, Les. I think that what's going to happen is he's going to talk a lot about data. He's going to talk about that inflation's been holding okay and looks positive, that the unemployment numbers look good. He's going to be concerned about GDP growth, which really shouldn't be his thing. But this will be, in my opinion, the precursor to the cut. This will be him really cluing the markets into, we think that the market's where we want it. Now, what he's going to do is he's going to emphasize, as you all know, how this uncertainty of the tariffs, because we have not had conclusion there, and the current conflict between Iran and Israel and potential U.S. involvement adds a monkey wrench to, oh, there we go. I knew I had this graphic for a reason. A wrench in the plan, if you will, with regards to us cutting rates or lowering. So we will probably hold off a little bit longer. Right now, the markets look good. Inflation's under control, as the latest core PCE numbers, PPI and CPI have indicated, and our unemployment numbers look good. So we're probably going to continue holding till this uncertainty passes. I think I just gave you the entire press conference, at least what Jerome Powell will say. Let's see how he fields the questions. He says, now Jay Powell can also point to the Israel thing as, yep, we have to wait for data. Totally, Big Eb. You know it's going to happen. You're like, can we just remove all these factors and let him just, he can't point his finger at something? Just, I have to cut rates. All right, well, that's going to do it for me, everybody. Hope you enjoyed. Again, if you have any comments, questions on things you want me to do on the show, you can email me at tradermerlin@gmail.com. If you guys have trade ideas, want to continue talking trading, you can go to the Discord room. I see more involvement there on a daily basis, so that's great. Again, it's only a couple days old, so we will see how that progresses. It's driven by you. I think some people are expecting that I'm going to be leading that room. I am not. Just want to make sure that you guys know I'm not planning on being in there and running things. I might comment every now and again or post some ideas, but it was really for you guys to get together because you've been asking me for a while, so I set that one up for you. Big Ed says, when are economics ever certain? Never. Never. But sometimes it feels like it's calmer waters, right? I mean, this just feels like there's a tsunami to the left of me and a tsunami to the right, the tsunami ahead, and you're like, okay, well, which one's going to hit me first? Like, how do I time this one? Which is fine with me, right? I'm totally fine with a market tsunami. I love market tsunamis. I just like them when I can calculate them and plan for them, so I'm riding that thing like a pro surfer as opposed to getting rolled like a first-time swimmer. Okay, anyway, enough of the bad analogies. That's going to do it for me, everybody. Thank you guys so much. Have a fantastic remainder of your day, and I will see you all on Wednesday.